Well, good evening and welcome to this live stream on the 27th of May, 2025. It's Martin North here from Digital Finance Analytics. Great to have you on this evening, and thank you very much for spending some of your Tuesday evening with us. As normal, we're going to have an interesting and relatively free-form conversation this evening. I will remind you that we don't provide specific financial or legal advice. This is a general conversation only. Play nice in the chat, please. Encourage you to put your questions and comments in. We do moderate the chat, of course, as well. And if you'd like to get your question to the top of the list to Tony or myself, if you use Outwalk the World, that'll get into my queue. I've also enabled Super Chat, which means that you can get your question to the top of the queue that way too, or indeed make a contribution to what we do around here. We really appreciate all those who do help us to maintain the show here. We do this not for profit, but we do this because we think there's a really important conversation to be had, and your contributions really help. Also, please like and share as well. Right, let me bring Tony straight in, and we can get the show underway. Tony, welcome. How are you?
Hey, fantastic to be back, Martin. And as per our pre-show chat, I'm pretty pumped for a big ending to 2025. And yeah, the world's certainly gone batshit crazy. We don't know what is real these days. But what I'm going to try and do, as with every show I do, guys, is at least you'll have some key takeaways. You'll go away with some tips, whether that's in life or finance. So I'm going to make it worth your while. I'm not going to get too bogged down in all the bullshit going on, but yeah, here to have some fun. Yeah, similar to a pub chat, Martin, minus the distractions and the poisonous frothies.
Well, I've got poisonous frothy, but it's only water. It's fizzy water, so maybe that counts. I'm not sure. Well, look, there's so much we can talk about. In fact, I called this show "What the question mark just happened," right? Because there's so much out there. But I guess we should probably just start with a little bit of what's happening over in the US with Trump and what have you. I made a show the other day, and I called it "The Markets React to the Art of the Deal by Going Full Picasso," and that's how I feel about what Trump has been doing. You know, the truth is that the art of the deal is clearly about trying to, keep shifting your position and keeping the other people off being, if you like, level. And you think about what they did with China, what they did with the EU on the tariffs, etc. But the point is, it's like a Picasso, right? Things are not quite normal. It looks weird. Everything's sort of a bit distorted and strange. And I think that this world of Picasso is a way to think about what's happened. A lot of things have got distorted, and a lot of things are off kilter.
Well, it goes back to that classic movie Tropic Thunder with Robert Downey Jr., where, you never go full retard. But the world has certainly gone full retard with Trump, the most powerful person in the world, arguably. And I think that's what we're going to have to deal with throughout his term. So, he can create shit coins and make hundreds of millions of dollars. He can say what he wants. He can put tariffs on wine. He can slaughter the Mexicans. He can put them in a world of pain with what he wants to say. It's just totally unfiltered. These days with AI, we're not going to know what's real or what's fake anyway. But yeah, the world has certainly gone full retard. And what an amazing time to be alive and to be absorbing what we're seeing, because it's just unheard of, Martin, and it's unprecedented.
Yeah, well, like I say, what on earth just happened, right? Well, Trump just happened, and what he's doing with the tariffs, I think, it's interesting. The UK actually ended up with a compromise tariff agreement where they agreed to pay 10%, which was amazing, right? So that wasn't actually a real win, although it was dressed up as a win. But there aren't that many other agreements in place yet. But maybe he's now kicked out the EU, from early June to middle of July to try and get them to do a little bit more in the way of negotiation. But the art of the deal is about putting the other party off kilter, and that's, I think, an important point to understand. I guess another thing we should touch on briefly again on the US, because this feeds nicely into some of the broader conversations I think we can have, that the US passed their big, beautiful tax and spending bill in the one of the houses, the lower house, of course. The Senate still got to do some stuff on it. But the interesting thing here is that the price ticket on this is about 3.9 trillion estimate over the next few years, right? And it's eye-popping in terms of what it's doing. And, is it to benefit people or not? Well, maybe not. But the interesting thing is that the bond vigilantes, I made a show on that called Signals from the Bond Market Front Line, are worrying about the $36 trillion debt rising by another 3 to 4 trillion. That's $106,000 for every single person in America. So the bond vigilantes, and I don't know what you think about the bond vigilantes as a species, but it seems to me that it's not necessarily, people, but it's actually bond traders who are actually really concerned about the deficit rising, the cost of debt rising, and the ability to be able to handle that. And you can see there that the debt's going up. Interestingly, if you look at the US debt distribution, 38% of debt maturity needs to be rolled into long-term treasuries by 2026. So that's a problem when, in fact, global curves at the long end are going up. And you can see that in London, you can see that in the US and Japan. So we've got a real issue now with bond markets effectively questioning quite seriously, what are you up to?
Oh, absolutely. And talk about trying to kick a flat soccer ball around the park. Everything's just being delayed, and there's only so much you can put off. And those figures for next year are absolutely frightening. But I think this guy can wield his voice, can wield the pen, but you got to look at a lot of his country is in fact a fentanyl-fueled toilet. And the price to income ratios to live in some of the places there are 3, 4, 5 times, because it's just run down emerging third world country. And I think I liken a lot of speculation to catching a Greyhound bus between Los Angeles and New York. It's just about all the characters you've got to go through in the middle. If you don't like your tech, you might spend some time with the Amish. If you don't like chronic diseases, you'd also spend time with the Amish. And you go through all these dive bars, you go through the church belt, the alien loonies, and then eventually you get to some semblance of normality, which is New York. But, there's just a massive toilet in between. And again, it's the most powerful country on earth, and they're holding everyone to ransom. And again, it's like cue the Benny Hill theme song for a lot of what Trump is doing. And we've got to tolerate it. He's talking about another term. Meanwhile, the paparazzi are chasing Harris around the Gold Coast and Sydney, doing that bullshit $1,000 a head real estate conference. I mean, what the hell's going on there? And I heard a bit of it, and I'm thinking, well, if anyone's paid $1,000 for that, dumb money is certainly infinite. But yeah, it's exciting times. It's scary times as well. And I'm just reiterating to my clients, when the market tanked, I actually went in on a Saturday and wrote a big email about how to handle it, how to play it. And now we're drowning in complacency. And I think complacency is probably the worst state of play that as an investor you can be in, because I know that this trampoline hasn't stopped bouncing, Martin, and it's only going to get worse as he starts to lose his marbles.
Yeah, and it is interesting if you actually sort of stand back and look at the market. So just quickly on the bonds, the move is highest in Japan, which is interesting. US, UK, Germany, Australia, Canada. So this is not just hitting the US. This is fundamentally shifting the yield curve and putting risk on, and making the point that if you want to borrow that long, the risks are a lot higher. And so that's going to be a very interesting consequence. Of course, one of the observations there is that with all the fixed rate mortgages in the US, driven off the long-term bond rate, that's going to put a lot of pressure on US mortgages. It's also going to put pressure on central banks, of course, and the cost of debt which means that effectively it's going to cost more to service, which means a greater proportion of tax take has to then be actually pointed into servicing the debt. Now that's going to create huge amounts of issues, and we'll come on to some of the tactics in Australia with regard to things like unrealized gain taxes and those sorts of things. So it's absolutely nutty what's going on there. But it is interesting also if you look at the markets. Here's the chart that shows on one hand the DXY, so in other words, the US dollar is going down, it's below 99. Markets have been up and down all over the place, but the PE ratio in the US is 21 times, which I would argue is absolutely to perfection, priced to perfection. In even the Australian market, the PE ratio is very high, which to my mind, Tony, is really an observation simply about the fact that markets, as you say, are absolutely complacent, despite the fact that if you look at the last results season, a lot of companies were talking about uncertainty. They were talking about revenue potentially under pressure and costs rising. So it's like the markets don't seem to have actually joined the dots. But it makes it quite difficult for investors to try and actually navigate the shenanigans with all of these movements. And I guess as we've discussed before, traders versus investors, quite a bit different species there. And I've noticed interestingly how a lot of the big trading banks made massive profits this time around because of the volatility.
Absolutely. And if you look at the Dow at 41.6, the S&P at 5,800. Historically, it's a raging sell, and we had the trampoline, we had those scary down nights, and then suddenly markets recover somewhat. It was a decent dead cat bounce, and now these PE ratios are going to look historically expensive. And if you look at the Commonwealth Bank share price in Australia, which is about $175, you look at Westpac, which hasn't even breached 32 again. Commonwealth Bank is the most expensive bank on earth, and it's trading like a growth stock. So talk about money flow into a bank that has a similar model to Westpac, NAB, ANZ, that is priced for stupidity, not perfection. And at some point, the party will end, but this dumb money just seems to go on forever. So where the Commonwealth Bank stops, no one knows. But would I switch to the other banks if you're after yield, but there's been no greater destruction of wealth than in the search for yield? I think boring old Telstra is probably going to see some love again. You look at all these healthcare stocks after what's just happened with HealthScope. You look at nursing homes, running businesses, they're being run into the ground. So you've got business models priced per perfection, and they're not well managed. So, and if you look at the tech sector, you look at Wise Tech, the guy's scandals at Minres, concerns over the iron ore price, concerns over other commodities. The Australian market, it looks expensive, and it can only be expensive till it isn't. And now is the time, if you can take a bit of risk. We had a bit of luck in the BBUS, BBOZ. They had a bit of a strong rally. Clients were able to take some out, realizing that the trampoline effect. And now it's time to slowly reload whilst markets are complacent. But I just cannot see any catalysts now to really drive markets through, what's higher than nosebleed levels. So Trump can undo these tariffs, but who the hell's going to believe him? It's the man who cried wolf. So major markets, to me, are an obvious sell. You need to be a stock picker. You need to find solid industrial companies with growth that might pay a dividend, that are going to do well. And you've only got to look at the stunning outperformance of JB Hi-Fi. You walked into JB Hi-Fi early days, you'd see the staff with their blue hair, tattoos and nose rings, but they were having an absolute blast. And that business model now is priced for perfection. And then, you look at the Australian market, and we have stocks like Dust that sell candles Christ's sake. I mean, of course, the consumer is going to stop buying scented candles. I think, fair enough to go buy a flat screen OLED TV. But I just think JB got it right. They took over the good guys, but candles, notepads, funny shit, sports memorabilia. I think that market's gone, and I got that impression when I'm sitting there with my kids over dinner, and they now call me Timu Tony. But I've never had more compliments for a $17 watch from Timu that's actually broken. So I've got it. I've cracked it. Consumerism, it's Gornsky's, Martin. And I was at a Woolworths supermarket a few weeks ago in Perth, and a lady just walked out with a bag full of meat, and the checkout operator stared at me. That's it. People have got to steal now to live. And there was no chase, there was no animosity. So, we look at markets, we look at consumerism, we look at all this rush of online shopping. I mean, really, it was just a dopamine rush for bored housewives, to be honest.
Indeed. Well, yeah, you got to ask, where is it all going to end? And it is interesting just to reflect on the Aussie market, right? Because we took a bath, of course, with everybody else, but we have climbed back quite a long way now. And the interesting thing about that is, if you look at the chart now, we're just about a few percent off all-time highs. And I'm thinking to myself, I don't understand how that can possibly be anything right. We're about PE ratio about 19 times. And yet the results season in Australia wasn't that flash. Even the banks said that margins were under pressure, and including CBA. But the banks, of course, bubbling away. One of the ones I quite often turn to is Macquarie, because Macquarie is quite an interesting, and you can see that it took a bath back down to 170, and now it's at 210. And of course, Macquarie has global exposure as well as Australian exposure. That's quite an interesting story there. But I'm trying to make sense of these valuations, and it's really quite difficult to do, which means that, buying in at these levels, it feels probably the wrong thing to do. Maybe, when they were back down, when Macquarie was 170, that maybe was a bit of a buy. And I tend to have a bit of a list of stocks that I think are quite interesting at certain price points. And if I see those price points come in and I know the company reasonably well, then I might well say, oh, well, that's probably worth putting my toe in the water there. But it is very, very concerning. And look, I've got this broad perspective. There's a little meme which I want to share with you, Tony, which I think is quite fun. It was this one here, right? This is in a boat. There's a hole in the floor. It's always been there. Don't panic. We've won the race with it. Other boats are in worse shape. If you don't like our boat, you can leave. I mean, that's what the US story has been up till now. The point is that the best of the dirty shirts might be the US, but actually many economies have got issues with high debt. Many economies have low growth. Many economies have issues with inflation still not really conquered. And, when you stand back and think about it, the truth is that wherever you look, things looking really quite uncertain. And I think your point about stock picking is dead right. So you can't just sort of say, well, I'll take the top line view. You need to do the work on where to find value. There is still value to be found, but it's not necessarily in the most sexy places, nor the ones that necessarily have done that well. But there are others where they continue to generate good returns, good revenue, and maybe their growth is not as strong, but it's partly about security and partly about upside momentum. And I actually quite favor those that are actually not in the sporty sector of the market, but, things you have to go through, healthcare and those things. Mind you, of course, some of the private health decisions in Australia recently, as shown from the recent collapses, also something to bear in mind. So I've got to be a bit careful, but I think stock picking is the way to go.
Yeah, and obviously the risk with biotech is Trump's desire to have the US pay whatever the lowest price country in the world pays, and that really shook up the biotech sector. So again, you've got to be careful that this guy can open up his mouth and cost you a large percentage of your wealth overnight. So yeah, I'm going to I often go through the entire stock market with a highlighter. We've got a little industrial company which has done quite well. Obviously, the price of gold importantly, guys, is just under 3,000, up 3,300 US, over 5,100 dollars an ounce Australian. And a lot of these Australian gold producers now, the likes of Northern Star taking over De Grey, Goldfields taking over Gold Road. It's now actually cheaper to buy ounces than go through all this environmental bullshit, say for a rare frog or a plant or a puddle of water. So M&A activity is driving the gold sector. And again, that's where a lot in the smaller cap stocks have done exceptionally well. Spartan, 11 cents takeover from Ramilius, $2.20 in under 18 months. So that's what you're going to get in gold stocks. But the institutional investor and the dumb money are nowhere near smaller gold stocks yet. There's no bubble yet in gold stocks. We're still at valuations where you'd think the gold price is a couple of $1,000s lower. And that's one area of the market where I'm keen to look at. I don't think that the powers that be accept the gold sector as a viable market, but they're mining money, literally. And I actually, one of my clients mentioned that he's a platinum Qantas frequent flyer. And it's funny that the price of gold is actually 3 times that of platinum, and platinum's the highest tier. So I think airlines are going to have to change up change up platinum a bit. But I actually had a look at platinum, and it's used in catalytic converters, and it's $1,079 an ounce. So there are ways to make money. I'm a huge silver bull. I think $32.90 an ounce last I looked. We're as full as the state school in one silver stock. It's a strategic play in Queensland. I think something's going to happen with the bigger silver companies up there. So we just got to be patient. And, my job is to spot the Spartans of tomorrow. And that's what I'm doing for clients. We got into Saturn. I took out a US fund. We bought a shitload of it. It's playing out well. But the last 3.5 years in small cap stocks have been the worst I've ever seen. And unless you can take some risk, it's certainly not a sector many are going to go near. But that's where the big returns are going to be made. And, you look at areas, property, you look at areas like Curl, which was a bit of a shit area. Now it's beyond blue chip. I look at areas in Perth where you could buy a house for 170 grand. Now, buying a house next to a meth lab costs you 600. So things change, sentiment changes, but all the money flow, all the funds have powered into banks, they've powered into the tech sector and major health stocks. And I think now all that money is going to look for new homes, and we're going to see some new sectors emerge in the market. And I think that there's going to be a case where the gold stocks are going to be the banks of tomorrow in terms of paying a 5-6% yield. But my theory is people holding tech stocks overvalued, paying a 3% yield. What the hell are you doing? Just stick your money in a term deposit and get 5.5%, 6% risk free. So that's where you're going to see it now. And again, you just should not hang on to a stock simply for the dividend. But look, let's take an all-encompassing view, guys. Major indices are chronically overvalued, and they're going to become fairly valued. Then they're going to become undervalued, and that happens with every bloody market. But again, we have an unprecedented political time in the US with Trump. We've got increased volatility. And the S&P 500, well, there's actually 503 stocks. It's all largely driven by 7, and that's where markets have fluctuated and grown. So you've got to look at the broader market. You've got to look at countries that are going to struggle with these tariffs. Like I was reading that the Mexican silver miners, their costs are going to explode. So it's gonna spread everywhere. and we have to, that's the rules we've got to play with, guys, and we've still got a few years of it, unfortunately.
The Western Australian government was actually quite supportive of the lithium industry and has announced some investments to try and help lithium miners. But the price of lithium is way down from where it was. And of course, the expectation was that lithium would in fact be critical because of the recycling and because of the renewables and all those things and batteries. So what's the lithium story, Tony?
Interesting that gold over the last year, gold is up 40% and lithium carbonate is down 40%. And what we got with lithium was clearly the mother of all bubbles, that it's had a couple of cracks, and it peaked. The lithium stocks peaked in about September 2022, and the price was going crazy. Lithium's forever. Electric cars going gangbusters. But now, as with any super cycle, with any bubble, it all turned to shit. And you had a few takeovers. You had hundreds of lithium companies that just came out of nowhere, all designed to cash in on the hype. And we had stocks, in the sense going into the dollars, and it was crazy. So I think that the price eventually is going to stabilize. I think things could certainly get worse, but is the time now to be a contrarian with lithium? I'm going to say no, because if you go full contrarian now, you're going to miss out on other commodities, and you're going to miss the gold and silver bubble, and you're going to miss another commodity. But probably the best way to play lithium now is I'd start picking off some Pilbara mines, PLS. They're about $1.34. During the height of the lithium frenzy in September 22, this thing was about $5.50. They're well cashed up. They've got operations in WA, South Korea, and Brazil. So that's as far as I'd start playing it. But I think, around $1.34, it's probably not far off its lows, and is a bit of a recovery play. Obviously, the others have been taken over. I just think that, if you're going to play lithium, be careful, because a lot of the former lithium high flyers have switched to gold. They've given up on lithium. I can't see them adding ammonium to the periodic table anytime soon. So, look, something else good ending in IUM I really like is rubidium. So rubidium is 2 to 4 tons per annum market. It's used in military. It's a potential replacement for cesium. It removes gases from vacuums. I don't know, maybe you could do that with your partner. I don't know. But that is certainly somewhere to look. We've had gallium, we've had antimony, but as I say with lithium, it's just devastating to watch a bubble burst in that fashion, and it has been deflating for some time. But if you really must play, start probably accumulating Pilbara. Seems to be in a good financial position, strong cash position. They haven't drawn down on all their debt, and production seems to be stabilizing. There are some other riskier stocks like Independence Group, but that's been struggling under a mountain of debt, and their other operations aren't going that well. So no, probably not the time to go full bore into lithium, because I think you're going to have to wait. But there are safer ways to play it, and who knows, that might be the only lithium stock you need into the recovery, because a lot of the lithium stocks would have switched to gold, then they suddenly become biotech, then they've become AI or ammonium stocks for the future. So good luck with that, guys. But these stock market bubbles, fads, .com, they go right back to the 1600s, and there's always going to be crooks with an idea coming to fleece you and your money.
Absolutely. Well, it is interesting watching, different parts of the markets move up and down. I suppose we should touch on Bitcoin at this point because,
Hmm.
the old Bitcoin is now at 109. This is 109,000 US. Obviously, even more in Aussie terms. And we know that, for example, the Trump family have just announced they're going to invest another 3 billion or something, some huge amount anyway, into various crypto things, and you sort of wonder about it. I've had quite a few people say, see, it was always going to go higher, but
Yeah.
it probably will because of the demand supply issue. But it's hard to predict exactly how this is going to play out, I think.
Well, where else in our time on this planet have you seen the president of the United States ramp shit coins and ramp crypto and have Elon Musk push cryptos that was designed as a joke? I mean, where's the bloody regulation? And you go back to the days of John McAfee, who said if it didn't get to $1 million by whenever, he'd eat his own penis, for God's sake. I mean, what the hell is it good for? If anyone bought it at 11 or 12 cents and has held it to $109,000, the chances are that Bitcoin's in a fucking tip in Wales and the guy's trying to buy the tip to dig it up. And last I looked, someone had one shot left on a password worth hundreds of millions of dollars. So good luck. If people want to punt on something that could go up or down, I'm not going to advise anyone on it. There's probably 25,000 shitcoins out there, and it's like every religion, it's right. They're all right. So yeah, good luck with that, guys. And Trump and all these coins. Yeah, if people want to play, go to the casino and play blackjack and get smashed, or open up the sports bet app. But if anyone tells me they're an expert on all this shit, good luck to them. Yeah, I'm sure these cryptos serve a purpose, but I'd rather stick to what I do. I can't advise anyone to go in and buy it, nor do I care, nor can I push the button to buy. So if anyone's held it that long, yeah, good luck. You probably would have had to been in a prison or in a coma. So, but
No,
anyway, no, that the world, you look at, there's a few probably genuine bullshit coins, and the rest of it's a load of, it's a fugazi. And that's the beauty of human stupidity, guys. There's so much of it. Let's make money out of it. Let's at least feed our families through it.
absolutely. And it's interesting, AI has just come out and said maybe that one was actually fake news, and the press came out and said it was fake news. I'm not sure. I haven't been able to follow that
Yeah.
up while we're on the air. But one thing I can tell you that isn't fake news was this, Tony. Did we see this? The court case, Victoria has ruled that, in fact, Bitcoin is money rather than an investment. And therefore, that means that the approach of taxing it as, buy, sell, make money, doesn't work. So as money, it would change its tax status. And now that probably will be appealed. But I thought that was quite an interesting observation, just in terms of, again, what the blah, blah, blah. This is another example of the world shifting under our feet.
Oh, geez. Okay. No, no, no. The Benny Hill theme songs just sped up a bit now. But yeah, all right. All this, the fear. It's funny. I've got, Pearl Jam came out with a song called Nothing Man, and it's just in my head about, Dutton and the opposition, and they went in with no policies, and now we've got this madness, and we've got talk of, super balances over 3 million being taxed to the nth degree, and capital gains tax on unrealized gains. I mean, what are they going after next? I mean, this is scary shit. Are they going to go after capital gains tax on the family home? Uh, but it's just a shame that Angus Taylor couldn't write up a policy to get some more votes. But that was just an absolute, nothing burger of an election, a campaign. I mean, Dutton came across like a beaten man from the start, and now we've got to put up with this lunacy. So I don't like to delve too far into politics, but yeah, no, if they want to go for tax-free profits on stuff that has no intrinsic value, good luck to them.
Yeah, well, it's interesting because when you actually stand back and think about it, two observations. The first observation, and in fact, Christopher Joy made a point about this the other day. High public spending has secured a soft landing for Australia, but that's high public spending, right? So we're spending a greater proportion of the economy is now supported directly by the government. Now we've talked about the incoming tax grab, taxing unrealised gains on over 3 million on superannuation.
Yeah.
And the fact about that is that the story, of course, is always that, what's going to happen? Is it going to be extended? It could well be extended. That's certainly possible. And if it is extended, of course, then there is an interesting question there about this. I actually made a show called The Next Incoming Tax Grab, Taxing Unrealised Gains. That's had about 70,000 views so far. And it's quite interesting. But 3 million in superannuation may sound a lot to a lot of people, but if you realise it's not inflated into the future, it means that 3 million will hit more people. And then, of course, we had, as you said, the other point there about they're coming after your home, as Robert here said, the unrealised gains tax has been carefully designed by the Treasury so that it can be extended to all investment assets and maybe one day the family home, which is pretty amazing. And yet, of course, you've also got the other point there. There is one group exempt from this new superannuation tax, right? The PM and all his entourage will be able to defer paying it until they actually retire, which is disgusting. So not only are they creating one rule for them, but one rule for everybody else, but it is ridiculous. And my observation on all of this, Tony, is, you can't make this shit up. But the point is, the reason they've got to do it is because of this, right? So we've got the Australian government sector as the share of economy going up to 28%, never been higher. And Victoria is the archetypal example of showing the problem. This year's net debt is 167 billion. It's got 194 billion. It's madness. So the question is, given the fact that governments keep on spending of all ilks, it doesn't really matter which side of politics you look at, they both spent big. The forward deficit suggests that this is going to become an ever bigger issue. So they need new taxes. And the only way to get new taxes is to do things like lifting the retirement age. And in Denmark's done it quite recently. I think other people could well follow suit. Or start taxing unrealised gains on assets. The problem with unrealised gains, let's say you had a house in your superannuation fund, right? And that house went up in value by, 10% over a year, right? Now, that would mean you would owe the tax people a proportion of the house. But the trouble is, the house is illiquid. And, so how are you going to pay that tax unless you've got other assets? So it doesn't actually work philosophically, but of course people are looking for extra ways to tax people more. And by the way, the tax take on ordinary Australians is much higher than it's been, historically as well. So this is the problem. We've got a government that's just wanted to go spend, and then they need more from us. I just shake my head thinking, what on earth is this about? And it's a classic illustration of the problem.
Yeah, and the people being punished here are the people that smoke and don't have access to a black market cigarettes that are paying $100 a packet of smokes for their habit, and those that the alcohol drinkers, so the smokers and drinkers, have been absolutely smashed to smithereens. I mean, I don't know how someone can afford to spend 40 grand a year post-tax to smoke cigarettes, and now they're trying to find new ways, but they're dampening it, saying that only 80,000 people will be affected with those superannuation changes. Well, it's going to be a lot less because some of these highly paid accountants are going to get to work, and I'm sure there's going to be a lot of assets being flogged, being switched, changed, and people will try and find a way around it. But, I think life's tough enough as it is. And people that have slogged their superannuation, I admit a lot of older people that trade stocks, they enjoy the tax breaks, and that's what they're there for. But you might see people switch to companies and pay a lower rate of tax on company tax. So you might see, people will still speculate and invest, but maybe in a different structure. But again, it's a worrying sign when a lot out there are struggling to survive anyway. And 3 million in super, you would have had to been fairly high paid if you were in an industry fund. I mean, I was in the police for about 8 years. I hear a lot of police retiring on pretty hefty superannuation. Obviously, politicians get the golden handshake, but it's not everything in life, and good luck to them. But I just think you do what you can. You try and understand markets. You try and benefit from human stupidity, which I've mentioned is infinite. You can sell overpriced assets. You have your chance to do it. We're now in another complacency window, as I like to call it, where you can move things around. And there's actually something that I'm about to do. When I go through all my statements, I see all these expenses and subscriptions and all that shit. And I'm thinking, a lot of us have been hammered on being complacent with cancelling stuff. There's a lot of crap we don't need. And I think, spend a couple of hours with your partner and go through everything you can cut out and redirect it. I feel just get your own balance sheet in order. And one of those points you made, Martin, about the retirement age at 70. I mean, I'm coming up to 54. I'm going to the gym 3-4 times a week. I'm playing paddle. I highly recommend paddle, everyone out there. It's great for your physical health. It's great for your mental health. Fastest growing sport in the world. Get involved. Really, I'm loving it. I'm playing 3 to 4 times a week. I'm sleeping well. I'm still on my carnivore diet. I did break it. I did have coconut when I went to Bali, which I publicise. But if I'm feeling the best I've felt at the age of 54, not every day's easy, and I've got no idea how people in more physically and mentally demanding jobs are going to work their asses off till the age of 70, where best case their life expectancy might be another 10, 11 years. And this is where they're opening themselves up for chronic diseases and they're on the slippery slope downhill. So work-life balance, kids, make the most of it now. And I must say, I think I'm turning 54 in July. I've finally cracked the code on life. And I tell you, it's not all about this slogging your guts away, but you have to stay physically, mentally fit. I mean, I haven't touched a drink since New Year's Eve, December, it was 2022 now. And to me, that's a great flex. I'm just trying to prolong my health so I can work as long as I can. And, there's been cases where people in the stock market can work till they drop pretty much. And I'd like to be one of them. So, life's, it's getting harder. And I think once you hit your 50s, you realize, well, you've got to think, well, how many quality years do I have left? Do I want to be slaving away? Is there a risk that if I slow down, am I going to end up homeless? Am I going to end up financially ruined? A lot of people stashed a lot of money. Stuff the kids, enjoy life, enjoy it. And now we've got to struggle with a government that's come in, really had no opposition, and we just got to bend over and cop it.
Absolutely, yes. Unfortunately, they rather feel as though the the mandate they've got is way bigger than it is. Just remember that they've been elected on 30% of the primary vote, right?
Yeah.
And a lot of the fallout was actually all the way the preferences all worked. So I'm a bit skeptical of what their mandate really is. And just before we move on, just one other little observation about this unrealized gains thing. Of course, if unrealized gains are calculated on the value moving up, what happens in the year when it goes down? Well, the answer is that you can actually have that as a loss, but you can't actually claim it back from the tax people. What you can do is park it on against future rises. So, if you're actually investing in something that actually goes up and then starts falling and continues to fall, that you can never get that back from that particular asset. So the whole philosophy and approach, to my mind, is completely flawed. And, once we open the door, and, the 3 million in superannuation sounded like a very narrow base, as you say, a small number of people, but it's the principle of the thing that I'm concerned about, because it will be spread, it will be moved. They'll move the hurdle down, or they'll spread it into other asset types. And once it is in, it'll never, ever go away again. It'll be like the toll on the Harbour Bridge, right? That temporary toll, remember that temporary toll that was imposed for a few years to cover the cost? Well, it's still there. And that's the point, really. So once it's institutionalized, governments can't help themselves. So to my mind, this is one issue which I think is really important to fight on. I will just mention another one just in passing, because I think issues to fight on. You might be interested in this, Tony. But do you remember it was a year ago that we got the final report from the Regional Banking Inquiry? A year ago, right? And they basically said, well, we should safeguard access to banking services in the bush and in regional areas, and that maybe we should surcharge the big banks to be able to make sure that they actually provide services into regional areas. Now, there is an agreement within Parliament. After 90 days, the government responds, right? Now, it's a year later. Nothing. Crickets. I actually made a show on it. No cash, crickets, and the war of mass distraction, right? Because to my mind, this is a classic example of the problem we've got, that they didn't want to actually participate in this particularly, but they were dragged into it, and the Senate did a really good inquiry on it. But the bottom line is nothing's changed, and the government is hoping to be quiet about it and not actually, respond. We have to hold them to account, and maybe the new Assistant Treasurer will actually respond. We will see. But this is a classic example, again, of when the government goes through form, but doesn't actually make any difference. It doesn't actually come to a point at the end of it to actually improve what's going on for ordinary Australians. And this will be a classic example when they should have done something and haven't done. And I get very cross about this. So I've been throwing the blowtorch on this in recent shows, because I think it's disgraceful.
Yeah. Oh, absolutely. I'll look at what happened when Bankwest pretty much shut down all their branches here.
Yeah,
it caused an absolute shit show, and we're talking about people in regional areas. And I think eventually in Perth we're going to get reasonable shopping hours, but still I wouldn't live anywhere else in Australia though.
No, absolutely. As Cookie Boy says, it's just another cash ban policy, and that's probably right. Now, let's move on then to talk about one last other topic area. And of course, we've got to touch on housing, haven't we? And we've got to start with the RBA decision. So the RBA, and their statement of monetary policy, and, they cut the rate. I made a show called Expect the Unexpected as Uncertainty Spirals. They had 134 references in their statement of monetary policy into uncertainty. So the RBA is not very certain about what's going on. The market seems to have immediately reacted with, say, right, whoopee, lots of cuts are coming this year. And I saw all of the various real estate posts saying, oh, property prices going through the roof, blah, blah, buy now. Interestingly, Shane Oliver made the point that, it's still in restrictive territory. It might come down a little bit. He's calling the next cut in August. But I just want to sort of reflect on, is this really going to help on affordability? And in fact, I made a post by way of a poll, and I asked people on this show to say, all up, will Australian housing affordability improve over the next 12 months? And the answers were yes, no change, and can't predict. Well, interestingly, 12% said yes, affordability will improve. 74% said no. 8% said no change, and 7% said can't predict. And of course, the reason is that if prices go higher, it just means you're going to be chasing your own tail in terms of trying to get into the market. And it's not like property is affordable. This chart here shows you the problem. The median house price way higher than the capacity to pay, which has dropped back significantly, moving up very slightly now. And, recent articles suggest the truth is we can't buy in Sydney because prices are way too high. This is madness. And yet the markets are talking house prices up and talking affordability. Everything's fine. Everyone's going to be able to buy. I just don't think it's going to be the way.
Oh, hell no. And, it will take time to settle. Obviously, we had the the Liberal victory in 2019. We've had COVID. There was a time to switch from the east to Perth. Perth is surging. And at the moment, my eldest son's just moved over here from Tasmania, and he's starting to look around to buy. And I'm saying, pick your area. I raved about first home buyer areas, Armidale, Camillo way, but houses there have gone from 180,000 to 600. Anywhere within the 12 kilometres. I live in an area in Perth where I'm within 10 kilometres to shopping, beaches, the CBD, and an Optus Stadium. But prices are moving higher here. Real estate agents are trying to contact me, getting me to sell. Oh, look, again, I'm saying to my son, I still think areas north of Perth are still going to come under some pressure, mortgage prisons, so just bide your time. But for now, with interest rates the way they are, I've got 18 months of my 5-year fixed left. I got that at 2.64. I'm hoping that we get those cuts and I can go in and try and lock in another 5-year term. But my dilemma is, what do? Do I try and smash it out? Do I, once my loan comes up for renewal, do I pay the thing off? Again, it was a no-brainer to lock in the rate I had when interest rates were 1/10 of 1%. And people were saying interest rates in our lifetime are never going to go up. Well, they've just come off 4.1. What are we at now? 3.85. When the long-term RBA average is over 6. So I know this has dragged on for a long time. I know the correction hasn't happened to everyone's liking. I know price to income ratios in Sydney are 13 to 14 times. I mean, that 1-bedroom unit I bought in Bondi would be probably 1.2, 1.3 million. And I bought it for around just over 100 grand. But again, that's what happens to an area that suddenly becomes blue chip because you get a shitload of people in a Chemist Warehouse. So again, it won't, Pantene, you just got to be patient. And we've had a rental crisis as well. So people outbidding by hundreds of dollars a week for a bloody rental. It's the world, as we mentioned at the start of the show, has gone full retard, but markets have a way of reverting to the norm and then overshooting to the downside. And I think unless anyone can see a rising star with some stability in the US, we're gonna have this madness for another few years. But again, there are pockets in Perth that are value. Obviously, you can't buy anywhere in Sydney. I mean, if you look at the outer suburbs of Sydney, like Broken Hill, you're going to get a bargain.
Indeed. And it's interesting, whether you saw this, Tony, but Demography published their latest report, the 2025 edition, and they had Sydney, Adelaide, Melbourne, Brisbane, and Perth all within the top 15 least affordable housing markets globally. Perth in position 14 at a median multiple. That's the relationship between the average income and the average price at 8.3. Sydney's 13.8. 13.8 times median multiple. Adelaide, in fact, higher than Melbourne. Adelaide at 10.9. Adelaide. And then Melbourne at 9.7. Yeah, Adelaide is a disaster because, of course, incomes in Adelaide have not been rising anything like as fast as the prices in Adelaide. A lot of people are buying into Adelaide, have been for quite some time, and that's put a huge rocket under Adelaide prices. So it's pretty much disastrous. So what that basically says is that for a lot of people, it is going to be very, very difficult to be able to pile into the market. I agree with you that the chances are people will have to leverage up even more if they want to get anything. And in fact, interestingly, even CoreLogic came out with this statement and basically said, don't expect a boom in housing prices until affordability improves. And the question is affordability going to improve based on the fact that the expectations would be probably some price rise? And, people will say, well, rates are coming down so I can get a bigger mortgage. But is bigger mortgages chasing our higher prices again really what we want in Australia, bearing in mind the demographic data? It seems to me that we've completely stuffed up the housing market in Australia, but more people have just got used to putting more and more of their incomes to buy somewhere to live or somewhere to rent. In my data, 50% of people, 50% of incomes from some people are going to actually just pay for somewhere to live. It's absolutely nuts.
Well, that's just a ginormous premium that you pay to live in Adelaide simply to have gather round. I mean, what the absolute fuck? And you think about it, I look at ocean glimpses. A view is worth a lot of money till it isn't. And you look at all this bullshit, the way adverts are written, houses with bowling alleys and all these marble and all that crap. I think getting to this age, I've lived in a 1-bedroom unit. I've lived in a 5-bedroom, nicely built house in a nice suburb in Perth. I think happiness is on the inside. Happiness is being able to go to the supermarket and put whatever cut of meat you want in, is to live freely, is not to worry about the bills, and not to be stretched now, fearing, what happens if rates go the other way? What happens if inflation gets out of control? What if rates aren't going to these mega low levels again, but half your income is just absolute stupidity? And I don't know what people want. We learn lessons from cars, we learn lessons from debt, we learn lessons from women taking us for a ride. But again, the world's just gone crazy, and these expensive prices aren't the norm. Markets will always come back, and they'll overshoot to the downside. Actually, no. Actually, I saw that comment on Adelaide. It'd be in my top 10 places in Australia to live, but I think it's a bit harsh. But that pricing's ludicrous. Perth's a beautiful place, and we've got no tolls, and we've got no poker machines outside the casino, and we've got telethon. We have a strongish government. We have Basil Zemplis is the opposition leader. I mean, come on, guys, think about it.
Absolutely. Well, the last thing I just wanted to touch on before we bring the show to a bit of a close, the latest announcement in the East Coast of the electricity price hikes. Right, this came out yesterday, in fact, and household power bills are set to rise maybe on 10% across much of New South Wales, Queensland, South Australia. Again, another failure of government policy with regard to the energy sector, and they're claiming it's all poles and power, poles and wires, etc., etc. But this is another little bellwether. Funny, isn't it, that nobody mentioned the perspective of effectively 10% power price rises through the election campaign. And, I'm just not surprised, but I'm concerned by this extra impost, which of course will flow through into higher inflation, et cetera, et cetera. And I just shake my head thinking, how has Australia managed to get itself into the point where we are paying the highest prices for our power, other than the West, where you've got a reservation, that pretty much anywhere? It just doesn't make any sense to me. And again, it's another failure of government.
Yeah, and again, it's total, we're totally dismissive of nuclear. That was a half-assed policy that the Libs took into the election. But again, now we've got Trump talking up nuclear, and uranium stocks are starting to have a bit of a run again. So where else can you slave your guts away? And when it's hot, you don't want to turn on your aircon. But I guess if you've got a blanket, we're heading into to winter. But what an insult to all these hardworking people who can't even power up their own homes. And I guess it's probably easier to get warm than to get cool. So I don't know, maybe there's some relief there. Some relief there, or they'll just go out and shoplift ski stuff from Aldi. I don't know. But it's just an absolute schmozzle. And then suddenly they expect these people to work till they drop. Anyway, I think you know, quality life is far too short for all of that. And you know, the power costs yeah, are going to rise as well. Yeah, we might get another quarter point. I mean, what are the RBA going to cut half soon? I doubt it because that's an admission that the economy's cooked. So
Mm.
I think they're going to have to tiptoe through the tulips with quarter point, keep it subdued. Again, it's not going to drive, you know, housing markets too high. Maybe there's still some upside in Perth. Maybe some of the dumb money from Radelaide can come over to Perth and push us up a bit higher. But again, you know, you think back when uh, I looked at houses around this area and I thought they're dirt cheap. But again, you know, I stick to my stocks. Maybe in some aspects that was a mistake, but at some point we'll be saying that property is cheap. At some point we'll be saying bank stocks are cheap, medical stocks are cheap, risk is cheap, and but you know, uh, unless it's black market, it's never going to be ciggies and beer.
Absolutely. And the last point I just wanted to bring to your attention, Tony, because I know that you know you've been following the property market quite closely
Yeah.
in recent years, as I have, was this announcement. The ACCC is probing the REA Group over price gouging concerns. So evidently, the ACCC has been quietly meeting with real estate agents and industry bodies over the past few weeks, asking whether they have feedback or issues with the 34 billion ASX listed company. And it's interesting, of course, you know, allegations about price gouging and the power of these portals. And I'm fascinated by this because I work with, you know, ordinary Australians trying to figure out what to do. And they keep asking me, well, you know, where do I get information about what's going on with regard to house prices? And I have to keep saying to them, actually, remember that a lot of the information on some of these property portals isn't as kosher as you might think it is, and it's quite often misleading. So it is fascinating that the ACCC is now beginning to sort of poke at this rather large bear. But to my mind, it's a real problem, and it comes, I think, right back to this point that when people are trying to make decisions about their own affairs, and I think people need to, it's quite hard to get good reliable information because of all the BS that's out there, whether it's from property portals or whether it's from spruikers, you know, from property, or whether it's spruikers for stocks or whatever. So I guess your observation, and you said it to me before the show was started, was you know, you've got to take a bit of personal control here and actually focus on the things that are really, really important, and maybe push some of the other stuff back a bit.
Absolutely, because you look at all the AI stuff now can create interviews with people like Hot Tour Girl. Everything's fake. Yeah, you look at, you know, I walk out on the paddle court, looks as though I'm sponsored by Timu. The world, everything can be replicated now, and you've got to look that genuine price to income ratios trading at double historically what they should be. Of course, you're going to have fraud, and one of the biggest things in any speculative bubble is fraud. And a lot of, you know, if people don't call housing a speculative bubble, they're crazy. If you look at a lot of the crypto garbage, it's just a speculative bubble, and there's not many. And you know, they say quick buck artists come and go in every bull market, but the steady players make it through the bear market. And I think that's what is going to happen. And there's a lot of cash for comments. There's a lot of bullshit getting around, and again, spruikers. And you know, when you got the president of the United States spruiking, whether it's fake or real, you know, it's scary shit. So we do have to take responsibility for for our own decisions. Unfortunately, yeah, things are tough. Costs are high. Stock up when things are cheap. Think about all your subscription services and what you own. The time for these mass garage sales was years ago. The time to get rid of your unused treadmills and weight sets was during COVID. Same time to sell a lot of stuff. So, yeah, it's certainly not going to get any easier. My mantra is I'm chasing the lotto dream for clients. Most of the time, drowning in dopamine. They just want the rush. They want the excitement that returns can bring. But speculation, it's hard work. Buying solid assets and waiting is hard work. And again, anyone going into thinking they can make a killing out of property development when the last generation had the best armchair ride of all time with asset prices, PE ratios, house prices, but it's not their fault. They've just been alive at a time when times were good, when we didn't have all this technology. Maybe the Amish have got it right. Maybe when you do that Greyhound trip between New York and Los Angeles, savor it because yeah, that's crazy.
Okay, Tony, one last question
Yep.
from Cookie.
Yeah.
Any new stocks Tony's eyeing? So, yeah, your chance to share a thought if you've
Well,
got one.
yeah, I make it perfectly clear that we're into the small stocks. It's certainly been hard. I on a new front, I think I mentioned rubidium as a potential metal of the future. There's one company in WA that does have a world-class rubidium deposit, does have some gold, and that's Everest Metals, trading around 14 to 15 cents. My clients own it, I own it. But honestly, I've been involved with a company called Red Metal for a long time. It runs between 3 cents and 55 cents. At the moment, it's trading at 11. If I had to buy one speculative mining stock at 11 cents, that would certainly be it. If I was looking at another Spartan or a De Grey or Gold Road, we've just bought a lot of Saturn at 18 and 21 cents. I think they're trading at about 30. That's a stock you could hold for the long term, adopt the coffee can approach. Biotech wise, we're sweating on a phase 3 trial for dimerics in a rare kidney disease drug. Hopefully that comes to fruition. But new stock wise, I'm there to guide clients through the madness. We've had a lot of base hits, but no home runs with the bases loaded yet. But again, it's hard to look ahead because if you're the only one buying something or keen on a new commodity, buying at the bottom's a lonely place, and sometimes selling at the top's a lonely place as well. So, certainly do your research on some of those companies. I'm always looking for new industrial opportunities, stalwarts, walking around, just observing stuff in life, and hopefully can pick some new stocks. But again, we're up for a big second half of the year, and I'm pumped, and hopefully I hit that home run bases loaded, Martin, and then I might just piss my mortgage off completely when my fixed term comes up next year.
Sounds like a good plan, Tony. Well, I want to say thank you very much for spending some time with us. And thank you very much also for hanging with me while I sorted out my weird technical issue. I don't know why it happened, but it did. But never mind, we got there in the end. So thank you very much for that. And if people want to find out more about you, where's the best place for them to go?
Actually, one of your viewers kindly set up a website for me, tonylocantro.com. So you just register there, and I'll send you some emails on my appearances and a few other client emails. Just a little taste of what I do. The sad part about my job is I always tend to get all my new clients towards the top of the market, and then it's weird. I mean, now's the time, June. If you're gonna do it, just make the move. Yeah, but it's funny how the rush always happens at the top, and then it's a long way down on some of them. And yeah, I just want peace. I just want a good life. I just want to eat meat, play paddle, and drink sparkling water.
Well, that's good advice, Tony. Well, I'm just knocking on the door of 70 this year. So,
Oh wow, you're looking. I must say you're looking great, Martin.
thank you.
And
Well,
we've shared this journey together. I think you're doing well, and you're obviously getting your steps. You're obviously drinking a high quality wine if you drink at all.
no,
But
I
yeah,
don't
no.
drink. But so yeah,
Oh, well done.
but it
Yeah,
does bring into sharp contrast what's really important about life, right? And
yeah,
you know, one of the things I regret, I think, is the amount I worked earlier on in my life when my wife was around. We both worked seriously hard for a long period of time, and you know, looking in retrospect, you think, you know, if I had that time again, I might do something a little bit different and just try and get better life balance. So my resolution has been to get that balance. And I actually think it's really important to take ownership and, you know, not just, you know, chase the next dollar, right? There's a lot more to life than that. So I guess my philosophical point to end the show is, Tony, I think that what you've been doing in recent times is an object lesson. And I think people should really wake up and smell the roses. And, you know, I want to say thank you very much for sharing your thoughts and your journey with us. And I look forward to having you on the show again down the track as wonderful things continue and as weird things continue. As we live in most interesting times.
yep. Pleasure, and thanks for having me on the show, Martin.
Thank you, Tony. Take care. I'm going to take you offline. I'm going to close the show. So there you go. I hope you enjoy that. Sorry about the hiccup in the middle of it. I'll edit it out for the replay version. But for those who hang with me, we sorted it. We just don't quite know why it did it, which is the worrying part. So I've now got to unfix it. And of course, the good news is the doggies are still here. Yep, the doggies are still there. Oh, Luna, where you gone? Let's go there. There you go. Luna's gone over that way. There you go. So thank you very much for taking some time this evening to spend with me and Tony and the dogs. And just to say that next week it's Leith Van Onselen who's coming on, and we're going to talk then about some of his latest thesis about house prices and a few other bits and pieces too. So that should be a fun session too. Anyway, thank you very much. Have a good evening. Please like, subscribe if you haven't done so. It's really important to get this message out. And I look forward to seeing you on the next live show next Tuesday. And of course, you can check out my recorded shows, which are posted every day of the year. Martin North from Digital Finance Analytics signing off. Take care. See you next time. Bye.